Alrighty. What is it? It is Friday. Uh, Good morning, good afternoon, and good evening from North America. Doc here. Another fun filled week we've had. Very entertaining on many different levels. And, just the GameStop vigilantes. That's the only way I can describe it since the GameStop did is about as the most insane of all the moves. I guess it could have been, I guess, $20 to $483 back down to $63. So that's pretty much that's a pretty exciting adventure. That you could say that for sure. And then we had some of the bigger names, like BlackBerry, the classic battler with Apple at one time. They also exploded. We had Nokia. We had a couple of other different. Oh, Bed Bath and Beyond, a retailer. We had some interesting things, or different sectors, I guess you could say. Uh, Explode and do different things, and then now they're starting to pare back to the norm of where they are. Back to fair value, I guess you could say. That's the classic. Doc is always talking about that. The fact that hey Robin, uh, you know, uh, that fair value is the big question. That's what we use our quantitative analysis for. It defines fair value much better than the classic old-fashioned PE or inflation or interest rates. Unfortunately, those things have become. I want to say they've become numb. That's what it is. The word is numb. Where you don't feel something after a while. It's disconnected from the physical world, and that's where we are nowadays. Trying to understand price discovery and currencies, which always lived and died by employment numbers and inflation and interest rates and government policy, are now just a tool, and logically so, I guess you could say, since they are very disconnected from a lot of physical reality. They removed it from being backed by something more than just paper. In other words, sterling is not really backed by silver, or gold. Same thing with the dollar. It's not backed by, silver or gold. It's only backed by the reputation of the country itself, and in this case here, the GDP. I guess you could say the GDP, the gross domestic product, which always leaves a big question in my mind. If China allegedly is the second largest economy in the world, why do they only trade 2% of their currency in the world? In other words, when I say they, I mean the whole world only trades 2% of the Chinese yuan, or less at times. So GDP now has become a question mark. Are the numbers accurate? We have to go with quantitative analysis to find the accuracy more than we can trust the fundamentals. Now, today we have labor numbers coming out in the United States. They're talking 50,000 or so, I guess, and that will be right at the end of the broadcast. So that'll be very interesting to see. And that's just another part of our, I guess you could say, our dilemma of trying to figure out the right prices for everything. What a lot of the members and viewers here, they're looking at supports and technical analysis and so forth, and that's really the quantitative side of it all nowadays. So anyway, that's where we are. Thank goodness it's Friday. Let's start off. We've been using the Swiss over the last 3 months now as a tool to see where the dollar is going, and obviously, as this is rising, the dollar is going up in value. Now here over on our Chicago quant, you can see it's a little bit less of an average and more of a live fact, I guess you could say. In other words, when we look at it here using the Hinky-Ashi tool to emulate our dots, red and green, you can see it's an average of high, low, close, divided by 4 type of thing. See, that's why you have those 4 numbers where it says Hinky-Ashi candle and then Hinky-Ashi border, and so it's kind of a little bit more of a challenge because it's as a lagging indicator, but it does emulate our dots pretty well, and so we like the way that does that. Let me think. You can see like in a situation here where it goes gliding down, and we have greens and reds at times. and then a bottoming thing here and so forth. But overall, it's about a 68 to 71% average. It fluctuates back and forth of being accurate to our math, which is much better than nothing at all as far as I'm concerned. All right, and that's why we use that. Now let's drift over to looking at the Chicago Quant more a little bit live at the moment. I mean, they're both live, but the thing is that you can see here the dollar is moving down a little bit today, just a little bit. But you can see also at the same time this explosion that we've had. I guess there's the real explosion this week or I guess that was last week. Started off last week, and it was pretty much aircrafted itself way up. And so the dollar is becoming a much more stronger product, and we talked about that. I had that epiphany somewhere in the middle or the beginning of the week. We labeled that webinar Blinder. And I just realized, all out of, someone was asking a question, might have been like 47 or who knows. One of you has asked a good question, which I always say, when they say, okay, now I'll shut up. It's like, don't shut up. Keep on asking questions because you never know what that will stir trying to understand our marketplace and these products. And, it stirred an idea in my head out of nowhere. It will be Blinder. There's a good chance that it's going to be Blinder. No one's talking about it right now, but that's a good reason why we keep on seeing that strength in the dollar, because that policy, between Mrs. Yellen and Professor Blinder from Princeton, that'll be very interesting. Hey, Middle Age, how you doing? Hope the April live cattle got back into the daily buy yesterday. It was interesting. Some of the back months did. I thought that was really curious. It's, I guess, you got your supply and demand thing going on. So we'll drift over to that for a second and take a look. There is the February. You can see the February is trying. It gave us the green dot. Let's give it a refresh too. There we are. So you can see there, right there. You can see, it everything but the gas line. See how the gas line literally almost parked at plot 1 is minus 0.01, and so just on the edge of getting there. And obviously the weekly has been telling you that the true selling is not really there until we see this really break down where they join in together, and you find both the green line and the histogram pushing underneath the 0 line here, and at the same time we're in a daily sell like here. But we're very close to getting into the buy. Now, this is February cattle, so it's getting ready to be delivered. Now, let's take a look at, because we're watching 3 different cattles now. There is the April cattle. And April cattle did close in the buy yesterday. And I know we're sending you both of those, right? I mean, I'm making sure anybody who's trading the animals or marketing the meats basically are seeing both, if not 3. So you can see that the April got back into the daily buy yesterday, and that's cool. It did that. And then let's go back. We're looking at also at the same time we're looking at cattle of 2022, April cattle there, and you can see that has been in a buy for 2 days. So the back month jumped onto it a day ahead of yesterday for the, it's a cascading effect. So April of 2022 has been in a buy for 2 days. April of 2021 has been in a buy for 1 day. And then you can see the delivery of February cattle is right on the edge. It's trying. Yeah, it's trying to get there. So that's pretty impressive, That's and again, this is why we are quant traders, because the fundamentals are very hard to live and die by anymore. With 0 interest rates and minus interest rates across the planet, there are people out there like that have the experience that I have, that I can create synthetic longs and shorts without taking on much risk whatsoever, whereas the average producer or hedger that doesn't have much experience will do things like be long or short, and that's it, done. And so that makes it very one-dimensional. Basically, you're selling out electronically in a sense. And you've gotten out of your position really. If you're growing corn or growing large herds or whatever, and you go and sell the futures against it, boom, you're out of your position now. In other words, it's already sold. And whereas if you're utilizing the option market like you do, middle age, then you are opening up the factor of being able to participate still. Our quants are amazing. I appreciate that. I think I'll tell you. I'm watching something. Doc is. You're bringing me like this morning. I'm watching a very interesting lecture on the combining of art, string theory, applied physics, and theoretical physics, and you go, okay, what is Doc talking about now? Okay, he's just left. He has just left the plantation. He's heading for the outer atmosphere. But when you really try to understand our physical world, I guess it was one of the scientists quoted Feynman, and I always like this quote by Feynman, the particle physicist who won a Nobel Prize. And he was, I guess, he became famous from the Manhattan Project. A very young kid working on the Manhattan Project. He was a young physicist, and he always says that physics in how does he describe it? Is science with a straight jacket on. Okay, so physics is science with a straight jacket on, whereas mathematicians can come up with multiple dimensions and possibilities and nth dimensions and so forth. And when you look at fundamentals, okay, when you're looking at financial fundamentals and you're trying to understand currencies on a fundamental level, they have all these n dimensions really. You have inflation and you have government policies of taxation or lack of taxation, support of industries or lack of support of industries, employment, increasing or decreasing, neighboring countries that are competitive in the same sector, just all those n degrees of concept. And when you go and look at quantitative understanding of finance and science and so forth, where what's the old classic saying about the rubber meets the road, where you're actually dealing with physical reality, and that's the true primer of it all, is not the theoretical, and that's what PEs are and PPI and CPI and unemployment and employment and inflation. And what other magical words can we use to try to describe how, for decades upon decades, people measured different financial products? And now we're at a point where, with zero interest rates and minus interest rates, all those things we just mentioned, the CPI and the PPI and all the other things, have been basically thrown out the window, because if it's not a guarantee that you're going to get a return on your investment, then you have to go find a way to get a return on your investment. And what I mean by that is, imagine normally you would have thought, oh, I'll buy some bonds and I'll underperform the overall market. Now you buy bonds, you're losing money, not relative to other sectors, but you're actually paying to buy those bonds. You're going to pay the interest to the bond seller. So you're going to go buy government bonds from the German Republic, or you're going to pay them interest to own those bonds. Whereas before, for centuries upon centuries, I think they say it's I don't know, it goes on for like a millennia, if not more, of recorded interest being paid on bonds. Now we're at a point where they're not. So when middle-aged muscle says your quants are amazing, what we're really doing is we're removing all the fantasy, and we're only looking at the physical reality. Our science, my financial science, as far as I'm concerned, lives inside a straitjacket. In other words, it has limits. And when you try to pontificate about, I can pontificate about Blinder being the next Fed chair, but and we know what his policies are. Everybody knows what his policies are. And then having Mrs. Yellen at Treasury at the same time, wow, is that going to be like liberalism on steroids? I mean, it's going to be wild. And we've already seen how that works during the Obama years with, Yellen and then Mr. Obama's Secretary of Treasury and so forth. We've seen how the markets went very docile, but on an upwardly slope, but really didn't go anywhere particular. When you really think about it, I mean, he picked up almost nothing over the 8 years that he was president. Because of his policies, the economy was, not running very well. And then Mr. Trump came in and the economy tripled. It was an explosion. Matter of fact, what was it Mr. Obama said? He says you'll need a magic wand to get anything growing ever again. This is the new norm, 1 to 1.5%. The objective for the progressives is basically to remove economics in reality. So, anyway, thank you for your quants are an amazing statement. I appreciate that. But anyway, there we are. You can see the 3 grades of the cattle. I hope that helps you out with your options. I'm sure it does. And then you can see, matter of fact, did hogs go back into the buy? No, yeah, they did. They went into the buy yesterday, but they flirted with it here. And then the opening of this bar here put it into the buy, and then it popped up there yesterday. And we'll see what they do to this thing today. See if hogs. Now, we talked about that, and we saw that article in China about how much they've, their hog crop, is dramatically down. They're having problems, some type of flu again or something. I don't know. They're always doing something over there. It's whack. But anyway, that's where we are. All right. Willing to look at anything, traders, so we can drift from cattle to back to the euro. And if someone wants to see corn or wheat or gold or silver or platinum or whatever, just yell it out and we'll go right to it. But we're going to jump over to the euro and I just go through my rhythm. This is my rhythm I do every day. And I'll stop and we will go right to whatever you're interested in. And this way we have a consistency, and you know that if you don't say anything, then we're just going to be taking a look at everything. So that's just the way we roll around here. Oh, let me just double check. You obviously are hearing me. I just want to put the other headphone set on. Yep, there it is. I can hear. Yep, I can hear me. Can you hear me now? That's what it comes down to. It's like that AT&T commercial. Oh, it's funny. It's funny. Oh, my God. So, that's where we are. Let's take a look at the euro. And let's see. You can see here it's got the pressure on the downside. We are way down when it comes to looking at the combination of the what is that? The slow stochastic versus the fast stochastic. That's always a fun thing there. And then at the same time, you can see over here. Let's go find it right there. There is the euro right there. You can see it's trying to perk its little head up just the way the Swiss is doing too, with it heading down. But you can see we're in a long weekly downtrend of a good solid 3 weeks, going to go to a fourth. And we've been in a daily sell for a bunch of days, like almost 2 weeks now. I guess it's 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Let's see, that is line 14, right? Yeah, so there's 8. This is going to be the 9th day in a sell. So 1, 2, 3, 4, 5. And then 1, 2, 3. That's 8. And then today will be 9. And so it doesn't look like they're going to really change too much of that course. That direction is going to be about the same. And then we drift over to the sterling right there. You can see this wants to go up. It did close. I think it did close in the buy, didn't it? Yeah, there it is right there on line 13. And that, we were 16 weeks in a buy. And, oh, look at that. We have that cute little circle. I guess that was supposed to be purple at one time. I mean, not purple. It was supposed to be the sell, but the sell has really disappeared. I don't know why it's green. I could have sworn I made it that. I thought I fixed that again yesterday. But anyway, we did drop underneath on the time manifold, and you can see it doing it there. And then we started to go through the zero line, and at one point, from that low, we actually got into the minus for just a little bit, but it's perking its, you know, asset value back up again. And then we take a look at it here through J4X, and there it is there. So you can see that strength. It's a quiet Friday, isn't it? You know, not much going on really, in the sense of, I guess everybody's waiting for the unemployment numbers. You know, I mean, that is the excitement of it all, and that is really, you know, a fundamental data point, and everybody's going to be looking for fundamental data points to excite ourselves. You know, that type of thing. Looking for something. Let me think. What else can we say about that? Huh. I guess not much more than that. You know, the currencies, to me, look like the dollar's going to be firm, and they're going to try to, you know, it looks like cable's going to rebel against that on some level. It's going to be a slow, steady grind up. The others could actually start losing more and more value over the next couple months, and if the anticipation is with blinder in there, then they know what kind of policies. The money already knows what those policies will be, and so they're going to start doing the anticipation, and so, you know, we may be seeing the what I would say, seeing the beginning of a stronger dollar again, and the liberals in the United States really do like that strong dollar, because they can use it as a tool to influence other countries. They love influencing other countries. They like to tell them, you know, control the weather, you know, build less nuclear power plants, don't burn oil. You know, they do. They like to, you know, kind of define what is what they consider important, and so they like a strong dollar, because it is a powerful tool, a strong dollar, because they can reach into these countries' economies with a very strong dollar and influence them way more than if it's a weak dollar. And that's pretty much what we're watching. All right, let's drift over to the Turkish lira right there. And you see this thing's just drifting down. Where we are on that, on the fact check spreadsheet. So we're 7 full weeks in a sell, and we're 13 days in a sell. Today will be the 14th with this type of action. So I guess it's drifting back down to, you know, maybe we're going to get back into the 5s or something. I'm impressed that we're actually threatening the 7 and heading for the 6s. That's got me amazed. That is fascinating. As I nibble on some popcorn, I'm like a little Piggly Wiggly around here. I'm being fed. Surprised I'm not eating soybean meal too. But yeah, that seems to be the recipe of it all. This thing is really showing lots of pressure to the downside, which is very impressive. You know, it's a good thing. Very good. All right. And let's take a look at it through J4X real quick. Real quick. Super quick. Super cut. There it is. And, you know, it's nice. I mean, I really didn't think we were going to go see the low 7s. At this point, we may be seeing going into the 6s before we know it when it comes to the Turkish lira. That could be really interesting. Wow. That's all I got to say about that. All right, let's drift over to, let's see, where do we go from here? We go to Canadian. That's usually correlated pretty well with the oil market. It's been a little odd lately, but let's take a look and see. And there's Canadian. You can see Canadian's kind of just pulsating along. Looks like it's going to get into the weekly buy. Let's give it a quick refresh, but it looks like it's going to get into a weekly buy. And it's flirting with the daily buy again after a couple days of sloppiness, and then that pop yesterday was really close. and you can see it right here. And a little pressure on it, but then that's the Hinky-Ashi, and you can see the same thing here. It is down a little bit, and we'll see what they do there. In this case here, our math is trying to turn up, and our weekly is trying to turn up. In this case here, you can see it's just losing a little bit. I'm sure it'll give a move up here by the close of the day or something like that. And so this thing could be weekly and daily buy. Now, what we usually assume when we see strength in oil, it's not a lot of strength, because you got to figure that we went into the weekly sell up in here, and we're doing more of a sideways chop than we are strength. And obviously, this does show weakness as it has risen. But when we go and look at the crude contract, is it the crude? Yeah, let's go right there. When we go to the crude contract, you see this thing is just lifted up. It's exploding up. And imagine we're line 23. So we are 13 weeks in a buy and 2 days in a buy. So the NASCAD is usually a little bit more accurate of the pairs trades to what oil is doing, and kind of predictive at times, and very predictive actually. And so let's go over and look at the NASCAD, not that, right there, and see what the NASCAD looks like. Right there. And you can see, what is that? Okay, so we're pushing in. Give me a control R on that. It's saying it's in a sell. And I see it. Yesterday, it gave us the volatility signal. So we weren't able to get into the sell, but because it was underneath, but we had a green and a red. And in the opening, if it's lower than the close of that bar right here, then it is into the sell. And that's what's happening, is we are pushing into the sell now. So, where's that? Line 23. Now, you would assume you would think that with that coming down, that we'd be seeing a weaker oil, but we're not. We're obviously not even remotely close looking at a weaker oil. Let's take a look at the oil through Chicago Quant. Right there, light sweet. It's showing a lot of strength. It's going for the 57 area. And let's just go back to it over here, like so. It's marching strong and up. Look at that. And you can see here it doesn't have any interest whatsoever. It's been in a weekly buy for a while too, since back here in November. So that's line 5. Yeah, so 10 full weeks in a buy, and now 3 days in a buy. So that rolling over the NASCAD, maybe they'll top this out. Maybe that's what they're trying to tell us, and you're seeing that strength in the Canadian. So you put the two together, and chances are maybe we're going to see a little topping in here in the oil, but it's not exactly a short or anything. It's just a take your profits type of thing, It's really acting extremely strong. And again, we're not sure if they're buying oil because, it's dollar denominated, and dollars are going up in value, and so, crude oil is going up in value from that, and that's what we usually see. Remember, we refer to currencies as pairs. So in other words, you buy euro, you sell dollar, or you buy euro, you sell British pound. In other words, you're dealing with pairs. In this era of zero interest rates and minus interest rates, it forces other products to be part of the pairs trade. So in other words, if you're going to buy dollars, you could also buy oil and not buy dollars and not upset the other central banks that you're over or under influencing a currency. And so what you see is money can go to very heavily denominated products and use them as a surrogate. I hope that makes sense to some of you there. And so that's the way it rolls along here. And so what we're seeing is maybe the strength in the crude oil is more because of a necessity to be long dollars, and they're not willing to step up and just buy dollars and sell euros, buy dollars, sell British pound, buy dollars and sell Canadian, so forth and so on. They're trying to stay inside the boundaries or that straitjacket that the central banks have on the currency pairs. So we're probably seeing something like that now. And that's why oil's acting extremely strong, because the world economy is not doing it. I guess you could say, in some ways, the world economy is coming away, leaving now the COVID situation. Now that the election's over with, now they can start to, like I put that headline out yesterday where they said mysterious deaths in England. Problem is that the death rate has dropped dramatically out of nowhere. And so they're doing a second lockdown. But why, if the deaths have dropped to the point where the death rate of 2020 is no higher than the death rate of 2019? So that was, I posted that yesterday. And that's the confusion we see. That's where we are. We're in that confused state where science is not in a straitjacket, as Dr. Feynman used to say. All right. Let's drift over to, I guess while we're here, we might as well start looking at the energy complex. We do that. So let's, we'll do that. We'll save the crude, and we'll just go through the energy complex real quick. I think we saw, what was it, natural gas start to lift yesterday. There it is right there. Yeah, we closed in a buy yesterday. You can see it's up again today. Let's give it a refresh. There we go. And that's the energy complex doing its thing. They're reaching up. Now, it's a little bit harder with natural gas, but I imagine that if you want to be long dollars, you could buy these products and create a synthetic in the options market to hedge the actual commodity, but still be at risk of the currency. And that's what, I'll say that again, because that's what Doc really means all the time when I say that it's a triad or a three-legged, it's not a pairs anymore. So what happens is that you buy a dollar-denominated commodity, hedge it with a synthetic option spread, and a binary type thing, and then what you do is you're hedging the commodity, but you still have the currency risk. Okay, and that's what Doc's always talking about. I know it's a little nebulous at times because Doc does optioneese. Doc speaks a couple different dialects of optioneese, and so sometimes I do the shorthand. If no one asks what I'm talking about, I automatically just default to talking about concepts that are not always explained out unless someone says, "Doc, what the heck are you talking about? Spill the beans. I don't understand what you mean by that." And then I can get into then I really go out into the stratosphere there. And there's that third one we look at, and that is soybean oil, since you can burn it. And that's doing the same thing. Closed in a buy yesterday, and you can see it's pretty much unchanged. Let's just give it a yeah, it's unchanged, not doing much there today. So, all right, now that's the energy complex, and what we do then is we drift over to the metals complex, because again, looking at that surrogate of the currency, the metals is a really good. Oh, not there. We go like this. The metals are a really good tool, and there's gold, and gold is up a little bit from yesterday. Let's give it but they gave it a punch yesterday. Now see that this is how they change the math. Look at that. They've taken the high out and they've changed the close, and that's just by me refreshing it. That's what messes up our math, is that they keep on changing the whole dimension of the value that we normally see. The open, high, low, close, and so that's what makes it a little bit wilder. You can see they tried to pop it a little bit and it's fallen back down again. And then looking at silver right here. Those poor vigilantes in the silver found out that the Federal Reserve has got more legs than they realize. And so let me just scrunch this down just a little bit so you can see some parameters of it. There you go. And yeah, that's what they did here. They pulled out highs and lows and did all that stuff. So we were in a buy all the way to here on a daily. But again, we were trapped in this weekly sell, so you really couldn't try to ride this. You just weren't short it, that's all. And then in this case here, then you could be short from here, obviously, and it's been a winner chicken dinner. And so there is silver. And then we go and we roam through the platinum one. And oh, let me just do this real quick. I just want to see where gold is again, so we can go right to the platinum. So gold is trading at 1798. So 1798, and let's see where platinum is. Platinum is trading at see 1798. So 1798. Is that 6? And platinum is trading at 17. So is that really 6? Did it break? Did it break to the 6th position? Wow. Let's see. We've been talking about that. So 1798 on gold, and let's use that. So 1798 minus 1116 comes out to be 682. Okay, so the spread is down to $682. Remember, I was saying that the last couple of days. I am hurting my elbow as I hit my, pat myself on the back. But the platinum gold spread is drifting just the way it should, or we refer to it as the Yellen spread. Now that we realize Blinder's going to be in there, it's definitely going to. Next thing you know, you're going to see $200 spread. So that's what you're seeing there. Let's give it a quick refresh to see if those numbers are holding up. They are. So we're looking at a platinum this week, holding up pretty firm. You can see the weekly has been bending down. We broke the time manifold a couple weeks ago, and it's flirting with the weekly sell. Let's just save that. But we are now looking at a 600 and what did I say it was? 682. So I thought we were going to see 690 and then stop, and it's playing with 682 at the moment. Huh. All right. So that's where we are with that. All right, and then let's see. So let me just double check the platinum. Let's see. Yeah, that's the 5th. And gold, that's the 5th. So that's what we're seeing there. How about that? That's what we talked about, for the last, I think we labeled it when it was up around $1,000, the spread. Now we're down to $682. So it's made $318. Robin and I even put that into the bar charts in the newsletter thing that we write into every couple days. So I guess, Robin, if you want to remind, you said you were looking to, we tried to put a pairs trade up on that, but there it is. We've broken through the $700 area, and we're down to 682 now on the spread. So, I know it's not an active pairs trade, but it's just I think what the best way to describe a lot of this stuff is that I think it's like a traffic light. It's like a signal telling you to go or not go, or a directional sign that says this town is that away and that town is that over there, and it's a directional thing. When you see the gold underperforming the platinum, it tells you what money is thinking. Money is thinking that maybe a little bit more industrialization or less central bank power. Boy, those poor GameStop vigilantes in Reddit and Robinhood thought that they could actually, have sway over the central banks of the planet Earth. Forget about that, huh? Hey, yo, forget about that, huh? Forget about it. And so that's exactly it. They took it right on the chin. And obviously our math was telling them, don't fight the Fed. Hello? Don't fight the Fed. Okay. And then last but not least, there's copper. You can see copper has been in a daily buy for a couple of days. And we climbed out of that weekly sell just of 1 week. And we've been above it throughout almost the whole week and in a daily buy. So it's been telling us to be long or you be wrong. You got to be long or you be wrong. And that's pretty much what we're seeing in the copper sector again. I guess they're anticipating build those buildings and then knock those buildings down and build new buildings. That's what they do in China. I find out they build these like 50-story buildings. They let them sit there empty for about 4 or 5 years, and then they knock them down, and then they build a new one. That's wild stuff there, you know. That's a that's like was it President Roosevelt back in the 30s would hire people to dig holes, and then they would pay them to fill in the holes, and then go somewhere else and dig holes, and then put dirt back into the holes. So that's the rhythm and concept of that one there. All right, now since no one seems to be asking any particular questions, we'll drift over to the stock indices, see what they're doing, and we're going to throw that up on J4X at the same time. This is the Tech 100 out of Dukascopy. This is the Nasdaq 100 index itself, and you can see here, that's that right there, and you can see right here. They're playing with their all-time highs as usual. Ooh, look at that. That thing is trying to back off again. Yesterday it did the same thing, but did not survive. It kept on lifting. And so, all boats risen by that tide, Boats are all risen by the tide. And so that's where we are there. As you can look at the NASDAQ 100 is flirting with a sell. Matter of fact, is that minus? That is minus. So what we're going to do is we're going to throw our cute little, with no dot in there, we can actually throw a red in there right now like that. So it's flirting with itself. But it's still plus for the day. We'll see. And this thing is flirting right back into the weekly buy. Let's see, NASCAD right there. Not NASCAD, NQs. All right, now we'll take a look at the S&P 500. And that one, same situation. Like so. And it's marching up also. Buyers are coming in. You got zero interest rates and minus interest rates across the planet and over $17 trillion worth of assets. Someone's got to figure a way to make some money, because when you're running a 2 and 20 fund as a hedge fund manager, you got to find a way to make some money, or they're going to pull the dollars from you. And then there's the Russell, which is all those stocks that went bananas in with the Reddit and the what do you call those? The Robinhood people. So that was a wild and woolly adventure of its own. And so there's the Russell, which we think was being used as an offset. I honestly believe that. That's what we're seeing there. In this case here, the thing couldn't even get into a sell last week because it was used as an offset. They were buying that to hedge their shorts. Hello. Not too good, is it? But then, it's come back. That's what you can say. And then you can see here, the Dow Jones Industrial Average is marching along with new all-time highs, or right at all-time highs. So we're looking at a lot of these sectors just marching back into the buy, and watch out, bull market ahead. That's what it comes down to. It may not be an explosive one in the sense that we go too far, but it just won't go down much. It's going to stay in some type of range and strength. And so that's the 4 indices, and then we go and look at Bitcoin this morning. I know it did close in a buy there on yesterday. I thought, it's been in a buy. And now let's give that a refresh. So it's a second day now. And we're in the third day trying to stay up. It's trying to stay up in here. And you can see the weekly is it's only $51.67 away from being into the weekly buy again after just 1 week in the sell. So, and then the old contract was, what was it? The old contract was a bunch of weeks in the buy. I think we still have a pretty picture of that. We won't get rid of it for a little bit longer because of the way this thing's filling in. Yeah, we were in a buy from all the way back into the, where's that? That was mid-December for that nice move from the 20,000 to the 40,000 area. Our quant picked up a lot of, it was 23,000, I guess, 23 to 43. So yeah, it picked up about 20 grand. Not bad. It doubled in price. Fascinating rhythms. Feel the beat, feel the rhythm. That's right. And so let's save that. And so that's the Bitcoin. And on Monday we're going to start a new futures contract, which will be very interesting. Ethereum. And that will be very fun too. Wow, this has been really quiet. Somebody's just say hi, just to make Robin, any of you, just to make sure I know that the tape is working. The top chat line. It's so quiet today. All right. Now we're just going to take a look at the two interest rates and see how they look. And there is the 10-year. You can see it was flirting. That did survive, I guess. And now it's trying to get back into the sell there. So we're going to put a little red line in there. So interest rates are rising again. That would make sense because we're seeing a strong dollar. And looks like we're going to be in a weekly sell there. Ah, good. Middle Age says April wheat, Doc. Okay. See, thank you, Middle Age. Trust me, I'm always hungry to go look at these things. Let me just save this real quick, right there, and we're going to go look at April wheat. I think we do March wheat, isn't it? I think we do that, but let's explore what you're asking for. So what was I trying to save there? Oh yeah, the 10-year, right there, like that. So let's drift over to that. So we do March wheat, right there. And I was impressed with the strength in that, but boy, the red wheat was leaping ahead of it all. Matter of fact, we can remove that because it was attempting to go into the sell, but it did not. Or did it? No. No, because the green line is plot 5. No, wait a minute. Plot 1 is plus, plot 4 is plus. No, so it didn't. So it's still in the buy, but going in the wrong direction or just barely surviving. And it's still marching up. And this thing is playing with the weekly. That's interesting when it comes to the March wheat. Now, let's see. Oh, don't be sorry. It's all right. And then there's the red wheat in March. Now that is looking a lot cleaner, and that's staying in the buy too. That's the interesting thing is that the Kansas City, Minneapolis red wheat, it's been in a buy since late August, and just won't come out of it. It just keeps on climbing from the 450s to the 625s. What else are we looking at? I think we're looking at another wheat too, aren't we? I guess we're not. Yeah, we have deck wheat somewhere. Where is that? That's deck corn. I guess we're looking at deck corn. Want to see what deck corn looks like? There's deck corn. There it is. Deck corn is, same way as the red wheat. It's been in a weekly buy since Augie Doggy. So there's a lot of, the world is really reaching for a lot of these commodities. And again, I know I'm probably one of the only people out there mumbling this stuff, but I'm not always convinced that it goes up because of scarcity. I'm thinking it goes up because they want to be long dollars, and they can then throw on an option spread, create a synthetic that will negate out the risk of commodity, but at the same time retain the risk of currency. I know that sounds pretty wild, but it is what it is. Huh. So that is the action we do see. Now let's take a look at the 30-year bond. We saw the 10-year, and then the 30-year right there, marching down and still in a sell. So interest rates are rising in the back months, and we can see that the weekly is doing that same thing all week long. And let's just give it a control R. And so it's been in the sell since, I guess, what's that, Tuesday? Wednesday? Thursday? Yeah, because today's Friday. Okay, so the pressure is on the interest rates. And another good reason why then the pairs trades, or the whatever you want to call them, but the pairs trades in general, are going to see a firmer dollar. And we've been using that as a title to our webinars of late. I guess we could say, how many ways can the dollar go up? That's, what I think. I think that is. I know it sounds like a joke, but it's really a reality too. And that is, how many different ways can you force the dollar to go up in value? By buying commodities, buying, dollar-denominated products and watching them go up, not counting the stock market. Imagine if you're a foreign investor and you're buying American stocks, and So now you're doing it with a foreign currency, and you're not buying dollars. That puts you at risk. If you don't sell those dollars short, you're long dollars, okay, by buying the currency. Not the currency, by buying the stocks, the assets. So now you're long dollars and you're long American currency. Yeah, American. I keep on saying American currency. American equities. And so you're betting that not only are the assets going to go up in value as stocks, but at the same time you're saying that you're willing to be long dollars. Now, obviously, if you go and sell the futures against the portfolio that you just bought, you are now hedging your equity. So in other words, you're not betting anymore the direction of the stocks because you're now flat, but you're still short dollars. You're short dollars. You're long dollars. You're long dollars because you got to sell dollars. So you're long dollars. So now you've got a dollar position on, and you could care less if IBM is going up in value or Microsoft is going up in value or Apple's going up in value. You don't really care if the stocks go up in value or not. You're long dollars now by just being long those assets, and you're collecting the dividend at the same time, and you're getting a return in equity. And see, that's what Doc is talking about. See, I talk about myself in the third person, but that's what we're talking about here, and that's how you create a synthetic. And so now you're getting the dividend from the stocks. At the same time, you're long dollars, and you're not long stocks because you've hedged off the depreciation asset value itself by hedging off of the stocks themselves by selling the futures contract or using options. You can use options to do the same thing. You can sell a in this case here, if you're shorting it, you would be selling the call and taking that premium and buying the put. And if you do it for credit, then you enhance your dividend out of it in a sense. So that's what Doc's talking about by the offset. I think that makes it much easier to understand, right? What do you think, Middle Age? Does that make sense? Does that make more sense than what I've been mumbling for the last 40 minutes? That's got to make more sense, right? Right, Robin? That's laid out very clearly. So you sell the future against you're living in Switzerland and you're using Swiss francs. And you go and buy American stocks. Then you go and hedge them things by selling the futures contract. You sell the futures contract. Now you've negated out the up or down of the portfolio you just bought. Okay, because you did it by hedging it with the futures. Then at the same time, you are risking your long dollars now. So if you're trying to offset your currency pair somewhere along the line, now you're long dollars. But you're doing it by being long U.S. stocks, but you're not risked in the stocks because you sold the futures against it. So if the stocks go to zero, you've made it all back in the futures contract. That makes sense, right? That's what I've been trying to say. See, sooner or later, a broken clock is right twice a day. Sooner or later, a blind squirrel will find a nut. Sooner or later, Doc will make some sense. So there we are. I hope that made sense. Anybody like what I just described? Does it make do you dig on it? Does it make it a little bit more simpler to understand when I'm talking about offsetting? And you do the same thing in oil. So you go and you buy oil, and you go and sell the futures contract against it. Now what risk are you taking now? Just being long dollars, really. Yeah, cool, huh? What do you think? I'm just waiting for somebody to respond to that. Makes perfect sense. Yay! Yeah, there we go. There we go. All right. Okay, so where are we at now? Are we done? I think we're done. I guess what we should do is come up with a title. I think today's title should be How Many Ways You Can Belong the Dollar. But it's true, right? I mean, if you watch this webinar, it'll come out at the end. It makes sense, right? I mean, I'm not just being crazy, right? I know I'm talking true derivatives, that's for sure. Let's see, title. Yeah, let's do that. Let's call this title How Many Ways We Can Belong the Dollar. Let's see, we'll label it right off, dollar. How many ways? Wait. Let's try this again. Back that up. There we go. Let's see. Okay. Let's try it again. Dollar. How many? Oop. No, not again. Oop. There we go. We're going to try that. Anyway, we're going to sing my way out of here. Happy trails to you until we meet again. Happy trails to you, to all my trading friends, TGIF, and we will see you on Monday. Monday is fun day here at Trading.